Before we get into today's video, I just need to remind everyone I am not a financial advisor. You must of course do your own due diligence. Please take this video as entertainment only.
Yeah, coincidence. Yeah, coincidence. Yeah, coincidence. Something that happens by chance, I think not.
What's the crack, everyone? Welcome back to Buy, Sell. I hope of course you are all well. My name is Damian and I've been doing this channel for 4 or 5 months now. It's going really well, guys. Appreciating all the good feedback we're getting. If you are new to the channel, please like, please subscribe. I'm trying to grow it, guys. I really appreciate all the good help that you are helping me out with. I'm feeling good, guys. Getting the haircut on Friday, long last, and just things starting to open up again, and I feel there's a good sense of optimism in the air, but it's having a bit of a change on stocks, that's for sure. It's an interesting time in the stocks. You know, we're at all-time highs. I'm getting a wee bit nervy. I'm starting to pull out and trim off some of the profits, starting to trim off some of the stocks that I have, and I seem to be shifting more towards cryptocurrencies as well. So it's an interesting time, guys. Speaking of interesting, today's video is actually on Boohoo. We've covered this stock many times on this channel. It's been one that has ripped the soul out of me several times, but it's also made me several big gains. So it's kind of one, and we'll have a look at the chart throughout this video, but it's one that just goes up and it goes down, and it's quite volatile, definitely, and it's not one for the faint-hearted, let's just say that. But today we have the update that we've been waiting for, earnings. I've had a look through it. I'm going to give my 2 cents worth on what I've taken from the earnings, the positives and the negatives, and this one does have both of those things. We'll have a look at how the share price is reacting to it, and generally what the future landscape looks like going forward. Without further ado, let's get into today's video then. So the last bit of news I broke out on Boohoo was on April the 3rd, and I'll share the link here and you can have a look at that. So I'm going to do a bit of an update just on any sort of recent news that's came out, just to bring everybody up to date before we get into the earnings. Okay, so over the last month, Boohoo has added 500 jobs to boost sales capacity within the new warehouse. The site is to become operational in the second quarter of the company's financial year ending February, so now we have this new site. As you can see here, it's to give Boohoo a sales capacity in the excess of £4 billion, guys. Huge. The new warehouse is scalable, with the group expecting to invest over 50 million in the coming years, increasing capacity and offering the group operational flexibility as it grows. The deal is expected to secure up to 500 jobs in the future, create up to 1,000 jobs as capacity increases in the site. That's brilliant, guys. Upscaling, investing in themselves. You know, just hopefully it's not slave labor, obviously, but if they do everything right, that's obviously great news, guys. Really, really, really good, and it's exactly what you want to see in a stock that's looking to grow and get bigger and bigger. We also had this: Boohoo acquires office and London brands for 72 million. The Manchester-based fast fashion retailer acquires a Soho office for its London-based brands for £72 million. Says the new office in 10 Great Pulteney Street is intended to become the home of the Oasis Warehouse, Debenhams, Dorothy Perkins, Burton, Wallace, Coast and Karen Millen brands. Notes 600 of its products, marketing, technology and central support employees will be based there. Karen Millen and Coast have been based in Euston Tower, just north of Soho on Euston Road. Again, we've talked about all this in the previous videos, all these acquisitions, the exciting ones, especially Debenhams with them branching into like homeware and beauty products. You know, that's a whole new section of Boohoo, so really interesting to see that, and it's good just to see now they've put that in operation, and 72 million is one hell of an outlay. So if we just go onto their website, we'll have a look, and I haven't really talked about their website before. It's a good website, very easy to use if you're buying anything. I have bought stuff from Boohoo before, yeah, of course. So yeah, it's a nice website. My wife loves it. You know, can't really be enough said about it. They talk about their strategy. Doesn't say anything about cheap labour there, but yeah, they talk about their strategy, sustainability. They're saying all the right things. Boohoo's very, very good at marketing. There's no doubt about it. The stuff that they do with the influencers is phenomenal. That's the reason why it's doing so well. So if we just look at the statements here, you can see here some serious gains, guys. 41% on the year on the revenue. Gross profit 42%. I could do that probably for the rest of these here, but I'll just read out the best financial highlights. Revenue 1.745 billion, up 41%. Strong revenue growth across all geographies, with UK up 39% and international up 44%. International revenue is 46% of total, up from 45%. So not a huge growth there in the international. I was kind of wanting to see a bit more there. But I'm not too surprised. There's all those issues within America that we've talked about. So That to me is a wee bit disappointing. So then I talk about COVID being an issue. Yes, it's an easy get out for every stock at the moment. COVID's the issue. Boohoo's really thralled because of COVID. I'd say the issue was the slave labour. Balance sheet's phenomenal. We talked about that. Phenomenal balance sheet. Even though they're doing so much investment, this balance sheet is still phenomenal. One of my main reasons I'm a Boohoo shareholder. Operational highlights. Okay, so they're talking about the agenda for change. That needed to happen. We've talked about it in previous videos. Strength of corporation governance through a non-executive director appointment, establishment of risk committee, and committed to the access of 10 million in supply chain monitoring compliance. Okay, so they're having to put money down to sort out these issues. Here it's all money that they probably saved over the years, like, so it's catch-22 kind of thing, like, but it's going to obviously have a bit of a negative effect at this stage. But hopefully it sorts the issues out, and in long term, these big, crazy, high volatile situations that we find ourselves in will be stamped out. Successful integration of the relaunch of Oasis and Warehouse brands. We talked about that. Acquisition of Debenham's online business and investing to transform the business into a digital department store with significant potential. We talked about the Debenham's acquisition. Wait to be seen how successful that is. Acquisition of Dorothy Perkins, Wallace and Burton brands, adding to the group's diversity and reach. That's just going to be a new coat of paint, business as usual. They've proven they've been able to take brands on and revitalise them. Warehouse XYZ, what we talked about there. So I have full belief that Dorothy Perkins and Burton will have no issues there. Guys, just going to take a time out here. Have a look in the description. You'll see a couple of writers' articles that I've featured in. They're a good read. There's also links to free trade. You and I both get a free share up to £200. If you're thinking about diversity, get more platforms on your book. Cover yourself, guys. Make sure you do that. Also, if you're thinking only about starting the journey, free commission, guys, free trades, you can't really go wrong. Also, if you're thinking about crypto, which I've started getting into a lot over the last few months, cryptocurrency, guys, I have used different platforms, but one of the ones that I recommend is Binance. Reason being, virtually no fees, and also if you click the link below, you'll get 10% off. So put that in perspective. Deposit £1,000, you'll get £100 off. Can't be bad to it, guys. So make sure to check out all that good stuff. Also, if you go onto my YouTube page, you'll see a community tab where I do a vote on a weekly basis. Go on, cast your votes, guys. Third distribution centre on track for operational use in spring 2021, which was kind of talked about it in the start of the video. 18 million active customers, up 28%. That's very, very good. More customers. It just shows you that all that negative news that's come out the last year really hasn't affected it. I've done a previous video where I talked about, doing a bit of my wife's friends. Do they know about the slave issues and blah blah blah? Half of them didn't know, and the other half said, I can still buy cheap clothes, can't I? So it's terrible, but that's just the way the world is. That's not going to stop you going on and buying stuff. I've read through this. Just going to point out a few key areas to you that is, to me, room for concern. Economic outlook remains uncertain, and we expect the benefits seen from reduced returns over the last 12 years to begin to unwind this year, while still experiencing significantly elevated levels and carriage costs. So they're sort of saying we're still going to do really well, but they're also pulling it back just a bit to say, by the way, it's got really bright in here because it's got really dark outside and my glow light is on. I've not turned the light on. That's just the way it is. Oh yeah, thanks, well. 25% still great growth, but they're reeling it back in, so that's going to have a negative effect. Capital expenditure of the remainder of the financial year is expected to be in the region of 125 to 175 million, so they're still going to pump more money in. This relates to the growth investments in our new warehouses sites, which we've talked about, as well as our continued enhancements of existing facilities, including automation at our Sheffield site to increase both capacity and efficiency. So they're spending a bit of money in-house, just getting things a bit more streamlined. I'm all for that. Big John then goes on to chat about it, but look, he's just repeating kind of what we're saying there. Co-founders then committed over the last year. The group has made great progress, delivering another set of records despite the challenges posed by COVID-19 pandemic. What he doesn't say there is about all that, the slave labour. So I've went down, I've had a look through all this here. I appreciate these videos can be quite boring, so I'm just picking out the best bits. Something that I felt was worth bringing to your attention, guys, is the rest of Europe. They're talking about Brexit being an issue, which could be an issue, guys. Import taxes, all that kind of stuff. Still a wee bit early to see what way that's going to go, but initially the gross margin has declined from 58% to 56.2%. That's not that bad for me, but bear in mind we've only really had the whole issue with Brexit since sort of January, so it's 3 months of the year, and that's a decline already. The profit after tax for the year, it's phenomenal. Some of these figures, guys, are really, really, really good. Just a wee bit more about the outlook then. Whilst the group Did see some benefits to demand in the last financial year due to lockdowns and around the world. Traditional core categories such as dresses are going out, saw significant declines. Obviously, nobody was going out. You weren't allowed to go out, and that would be where their higher margin would be. Bear in mind, we've talked about that before. That kind of thing was going to get a bit of a pullback, and that's where their higher margin is. It's the loungewear, it's the day-to-day stuff. Yes, all that stuff's throbbed, but that's where their lower value stuff is. So yeah, you have to kind of consider that. So the topic growing concern, guys, directors are just pretty much saying that their investments, all that, is going to have a negative impact on their financial forecasts and projections, expenditure, cash flow. Obviously, the more money they're spending and investing in themselves is obviously going to affect their cash flow, so I'm not concerned about that. Pretty little things. The remaining 34% non-controlling interest was acquired in May 2020, ahead of the original 2022 option to acquire date. As across the board, it's a very good report in my opinion. So we pull out the chart here, we're going to look at the last year. As you can see, guys, it's went up and down and it's been a bumpy road. Ultimately, positives, and always looking for the positives, guys. It has slowly crept up. These big dips are obviously to do with all those scandals. Slowly but surely kind of crept up if you forget the bump, like. It has went. If you just look at today's chart then, market has opened 0.9 down. I think it was at one stage 0.15 down, and it was up a wee bit. So it is what it is. Okay, guys, so that's the video. Pros and cons to the earnings. Like most statements, they're a bit of a mixed bag. 90% of this is very, very positive. I love the year-on-year gains that they've got. I think the share price is kind of just flat because it's not blew out of the water. It's a lot of it to be expected, in my opinion. And just a wee bit of a pullback on the outlook and a wee bit of uncertainty there in the outlook is maybe causing it to be a bit flat. Very, very positive. It's good that the little Pretty Little Things deal's done ahead of time, so that's acquired. They've bought all these new warehouses, they've all these new brands, the Debenhams, the makeup. So much money's been spent. It's going to take time to get the operational stuff sorted. You got to remember, this is a business. It's not just going to be we've signed Debenhams and then tomorrow the Debenham stuff starts selling out. The makeup's all there. It's going to take time to bed all that in. I would be expecting that to sort of start operating. Well, we've seen the outlooks there, but this year it's all going to start to flourish. By the end of the year, guys, I would like to think this will be at least over £4, and I'm fairly confident of that. They're saying 25% in revenues, but we'll continue to monitor it. That I think it's definitely a hold anyway. If it significantly pulls back, buy the dips, phase the money in, the usual. Love to hear your thoughts though on Boohoo, the recent earnings. What's your plans going forward? Please leave comments below. Get me on Instagram as well, BHSDMV. Well, until next time, guys, enjoy the rest of your day.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.